What's going on, guys? Dwayne here with my investment journey, and in this video I'm going to talk to you guys about how to start investing in the stock market. Now, before I get into that, let me just tell you, I'm not a guru. I'm just an average guy. I'm learning on the fly, so please just take that for what it's worth. But I'm going to share with you my thoughts on how to get started investing in the stock market. As a matter of fact, in this video, I'm going to talk about 4 things that you should consider, or 4 things that you should think about before starting to invest in the stock market. Once again, I'm by no means a professional, nowhere close to it. I'm just the average Joe, and I decided to document my journey here on YouTube in regards to investing with the stock market and kind of take you guys along with me for that ride. So if you're new to this channel, once again, my name is Dwayne with My Investment Journey, and I talk about how to start investing in the stock market, and I show you my investment journey. So be sure to subscribe to the channel and click that notification bell so you don't miss a thing. Okay, so this is a live stream. So if you guys are watching this back on the replay, or let's say you're watching this video and it's not live, just understand that this is a live stream and I will be responding to people in the comment section. If you're watching back on the replay, you should have the ability to hit live chat and kind of see the comments as they roll in. So this is actually my first live stream on this channel, My Investment Journey. I do have another channel talking about credit cards and stuff, but this is my very first live stream. And so, yeah, it'll be an interesting one. So I'm going to basically give you the 4 things that you should consider in regards to how to start investing in the stock market. And then I'll kind of deal with the live aspect of this live stream. So as people are coming in, be sure to hit the thumbs up in this video. It helps me tremendously, and it lets YouTube know that this video is valuable, and it will put this video and more of my content in front of more people. So be sure to smash the thumbs up. That helps me tremendously. Okay, so when it comes to starting to invest in the stock market, I just kind of jotted down 4 things that I wanted to kind of touch on today. There is a lot of ways to make money in the stock market. And once again, I'm by no means a guru. A lot of you guys may not necessarily know that you can make money in the stock market by purchasing a stock, and as the stock is going down, if you buy it here and sell it when it's lower, you can actually make money that way. The average person knows that you can make money when you buy a stock low and sell it high. Everybody knows that, but a lot of people don't know that people are actually out there making money when they're shorting the stock. So that means they'll purchase it here and they'll have the ability to kind of do the reverse, right? Instead of buying low and selling high, they can buy not necessarily high, but if the stock is going down, they can do that. Now, there are some people that are really sophisticated where they can make money when they purchase down here. As the stock is going up, they can make money, and as the stock is going down, they can short it and make money both ways. I'm nowhere close to that. I'm not even interested in doing that. That takes a lot of time and practice and energy and skill and stress, and that's not what this channel is about. So I'm going to talk to you guys about the 4 things that I think you should consider when it comes to investing in the stock market. And as you guys are coming in the live stream, once again, this is a live stream. Be sure to smash the thumbs up. It really helps tremendously. Okay, so when it comes to investing in the stock market, the first thing that you need to consider is what kind of investment account would you like to have? So there's a bunch of different investment accounts, right? So you have it more simple when it comes to like investing on an app. You have Robinhood, which a lot of people know Robinhood. Robinhood was definitely, like, in my mind, and probably in reality, the very first app when it comes to investing. At least the very first app that kind of went mainstream. So there's Robinhood, and then you have Webull. And Webull is right up there with Robinhood. It's very, very good app. Between those two, I personally like Robinhood just because that's the one I got started on. It's a lot more user friendly. It's insanely easy to use Robinhood. It's very straightforward. Now, Webull, not necessarily that easy, not necessarily user friendly, but it has way more information and it's way more analytical. So there is, like I said, Robinhood, there's Webull, and then of course there's more traditional brokerage accounts such as Charles Schwab. There is also TD Ameritrade, there's Fidelity, there's E-Trade. There's a bunch of different places that you can set up your brokerage account in regards to investing in the stock market. So that's kind of the first thing. Let's say you decided, okay, I want to invest. You need to decide what type of account you'd like. And so one of the cool things is, as I'm learning information about the stock market and my own journey, I share that with you guys. So I have a lot of investments right now on Robinhood. As a matter of fact, I guess I can show you guys that real quickly on the screen so that you guys can see what I'm talking about. Let me pull up my Robinhood real quick, and then I'll show you guys that. Where is it? Where is it? Here it is. So I'm going to pull up Robinhood. I'm going to share my screen real quickly so you guys can see that. So this is my Robinhood portfolio as of today. Yes, there's quite a bit of money in the account, but that's not how it always started. It didn't start that way. And as a matter of fact, more importantly, I'm still in the red. I'm still down on this account. So as you guys can see here, where the mouse is, or sort of the middle of the screen, middle left of the screen, you see where it says 1D, which means 1 day, and then it says 1W, which means 1 week, 1M, which means 1 month, 3M, which means 3 months, and then 1Y, which means 1 year, and then all is all time. So as I kind of cycle through that, you'll kind of see. So this is today. So as of today, today was a decent day. Yesterday was not good. So today the stocks kind of recovered a little bit. And so today I'm up $3,000, but it's not like I made the $3,000 because I would have to sell everything in my portfolio to really make the plus $3,000. Okay, so I'm up currently. All right, so if I touch on 1W, you see here that for the week, I am plus $83. And if I hover over, it shows you every single day in the market. Okay, so this was the 15th. Then here's the 16th. Here's the 17th. Here's the 18th. Here's the 19th right here, which was yesterday. And then here is today. Today's the 20. No, today's the 21st. So here's the 20th, and then here's the 21st. So yesterday on the 20th, you see it went down quite a bit. At the end of the day, I was negative, like almost 3,000. And then today, it kind of came back up and kind of recovered a little bit. So for the month, if I touch on 1M for the month, I am currently up $13,000, which is pretty cool. 3 months, I am currently down $2,800 3 months. And this is where it gets a little hurtful. If I touch on 1Y, which means 1 year, I am currently down $7,500. Okay, so if I touch back here, I started to invest in May of 2020. I started to reinvest again. I did some investing back in 2016, and I think I lost like $4,500, and I just gave up. But I started my reinvesting journey back in May of 2020, and I have deposited into Robinhood. On the screen, you see it there, $214,000 into my Robinhood account since May of 2020. That doesn't mean that I deposited the entire amount right away. I did not, but I deposited over time. And the reason why I'm showing you guys this is because I want to show you that there was a time, October 29th, I think it is. Let's see, October. Let's get the cursor to work here. It's not. Okay, there we go. October the 31st. I was down negative $59,000, negative $59,229.35. So overall, I'm still down for the year. I'm still negative $7,500. And then if I click on all time, which really hurts my feelings, but we'll click on it. All time, I'm down $11,000 all time. So as you can see, there was some activity here back in 2016. The numbers on the screen is not accurate, right? Back in 2016, I didn't have $218,000 invested. So I had invested, whatever. This has to do with how much money I've deposited into my Robinhood account. So all time, I'm still down negative almost $12,000, right? Let's call it $12,000. So once again, I'm by no means a guru, but I'm trying to turn it around. And I really have turned it around in regards to investing. I'm doing more dividend-focused stocks, dividend-paying stocks. So that's kind of my thing right now. And that's what I'm currently doing. And that's what I'm going to spend the majority of the time on the channel talking about. Once again, guys, please be sure to smash the thumbs up. More importantly, though, if you have any questions, hopefully I can answer it. If you have any questions, slap them in the comment section. I see we have 6 people watching. This is a live stream. Okay, so be sure to smash the thumbs up. That helps tremendously. And if you're new and you haven't subscribed to the channel, be sure to subscribe to the channel because I'm going to be showing you, I'm going to be documenting my journey. Okay, so the first thing, like I said, when it comes to investing in the stock market, how to start investing, you need to decide what type of investment account you'd like. So that's like a Robinhood account, which is an app, Webull, which is also an app. Once again, Robinhood is more user-friendly, Webull not so much. And then, of course, you have other investment accounts like TD Ameritrade, E-Trade, Fidelity, Charles Schwab, so on and so forth. There's a lot of different brokerage that you can go with as far as investing in the stock market. The second thing that you should consider when it comes to starting investing in the stock market is what type of stocks do you want to invest in? Or I guess I could probably say, what type of investor would you like to be? Okay. And I say investing because investing it doesn't mean that you're a day trader, right? When it comes to the stock market, there's people that trade daily. And what that means is they're simply in and out of the stock market. They don't let money sit. Normally, they don't let money sit in an account overnight. Okay, so they literally come in and they just kind of scalp. They just get their little profit and then they leave, and that's it. So they may trade for a couple of hours that day, and you better believe that all days are not green. Okay, being a day trader, it requires a lot of skill, a lot of patience. It requires not having any nerves. You know what I mean? Like having ice in your veins. Being a day trader is not for me. And that's another reason why I was down almost $60,000 because I was trying to be a day trader. There's also something called swing trading, which is where you kind of hold accounts. You hold stocks a little bit longer. You may hold it, a couple of days or a week or so, maybe even a couple of weeks. That's kind of swing trading. That's probably a little easier to do than being a day trader. You can swing trade and do well if you swing trade with solid companies. When I started, I was trying to be a day trader or a swing trader with companies that weren't very solid. And I was very, very aggressive. As a matter of fact, I can show you guys how aggressive I was. I will show you guys some of my history here. I don't know. Let me see. I don't even know how to do it here because this is new to me on the desktop. I normally do everything on the phone. You guys can't see that right now anyway, but let me see if I can, let's see if I can kind of show, well, I'll show you guys one example. I'll just search it and show you guys one example here. So I'm going to search United Airlines here on the screen. I'll update you guys in a second. I'll share my screen with you guys in a second. But I want to show you how aggressive I was when I first started trading. And I'll say that this is really aggressive. All right, let me share my screen real quick. This is really aggressive. I'm going to show you. All right, so here's United. And so currently it's $51.62. There was a time where I had shares with United, but because I was trying to be a day trader, and I had already lost a lot of money. Like the first 2 days that I invested, I lost like $6,000. It was not good. And so I'll show you that I at one point had shares with United. I think I can show you. Yeah, here we go. Here we go. I was like, where is it? Okay, so this is my history with United. So if you just look at the history real quickly, okay, this hurts. Let me click on show more. and I'll show you just how aggressive I was as the screen loads here. Okay, sweet. So we're going to go back and kind of show the history with United. So as you can see here at the bottom of the screen, I bought on May 26, 2020, I bought 1,000 shares and it was almost $28 per share. So that was $27,000, right? Almost $28,000 that I spent buying 1,000 shares, right? Because I'm playing with big money. I'm being super aggressive. Okay, cool. So you see that there. And then I sold on the same day 1,000 shares because I got a 39-cent profit. So I made not a 39-cent profit, but it went up 39 cents from the $28. So whatever the difference is between 28,391 and 27,999, basically let's call it a $390 profit, right? So I sold. All right, so that was cool. I made a little bit of money there. That was great. And then on June 3rd, 2020, I bought 160 shares. I'm not sure why, but I bought 160 shares and it was $31. Now, if I had just let my 1,000 shares sit there from the $28 in the very beginning that I bought, right? Because I felt like United Airlines, the stocks are going to go back up. All the airline stocks are going to go back up. But because I was being a day trader, I was like, I got to sell. Okay, let me show you here, June 3rd, there is a buy. I bought 2,000 shares at $33.32 per share. That cost $66,640. That's being very, very aggressive. Okay, same exact day. Okay, so I had altogether basically 2,100 shares, right? June 3rd, I sold when it went up to $33.53. So I got my profit and I left. Now, once again, if I had just held the shares, I had 2,100 shares and it was $33. Let's say for easy math, let's say it was $34 per share. And I had 2,100 shares. All right, let's go back now and look at the price of United today right now. So right now, that's 2,100 shares at $34. Right now, United is $51. So let's do 51 minus 34. That's $17 difference, right? $17 times 2,100 shares would have been plus $3,500. Now, the crazy thing is, because I was trying to be a day trader and I didn't know what the hell I was doing, even though I knew initially when I decided to invest, I knew like the stock market, airline stocks are going to go up. Like there's no way they're not going to go up. Okay. And I saw United when it was literally like $20, $22 per share. Okay. And so, there's definitely lessons to be learned there. You can definitely be like a swing trader and do well, right? But only if you invest with companies that are really solid, right? So let's say you have a lot of money to play with. If you want to be a swing trader, you can buy a bunch of shares with, let's say, Apple, right? Apple is a solid company, and the reason why I'm using Apple is because it's very unlikely that Apple's going to go bankrupt in my lifetime, right? I'm 42 years old. I don't see Apple going bankrupt, right? So if I was trying to swing trade with Apple, and let's say I just bought let's say $60,000 worth of shares because I spent $66,000 on United, right? So let's say I'm watching the stock market and I realize Apple had a bad day. The shares went down $2, $3. When that happens, 99% of the time, the next day, it's going to go back up, okay? Every now and then, let's say it went down $2, $3. The next day, it may still go down $1. I've seen some crazy stuff where the market literally, I saw shares just go down like consistently 2-3 days in a row. But it always recovers. And so when you're investing with a solid company like Apple, you can always kind of grab a piece of the pie. Like when you see Apple go down $2, $3, if you have a lot of money to just throw in there and you want to make some quick money, you can do that. But it's very, very nerve-wracking. And so swing trading and day trading is like, you know what I mean? Like, it can be tricky. At times, I think to myself, maybe I should come back, circle back, and do some swing trading now. But I need to build up the money that I want to play with, right? Because I want to buy as many shares as I can, so that I don't need a $2-3 swing to make a big profit, right? If I have 1,000 shares, right, and I get a 30-cent swing, let's see, 1,000 shares times 30 cents, right, is $300. So that's a $300 profit, right? Those same 1,000 shares, though, if I have 1,000 shares and I get $1 or $2 swing, that's $1,000 or $2,000. So the more money you have to play with, the easier it is to like make money in the stock market. However, it can and will be very stressful. Okay, so I wouldn't necessarily advise anybody to be a swing or day trader, especially in the beginning. You know, it just takes a lot of time, and you got to just kind of stick with it. I mean, like I said, right now I'm currently down, what is it, $7,500 or like $8,000 right now, and I'm still here, right? Okay, so the second thing you want to decide is you want to decide what kind of stocks you want to invest in. Do you want to invest in growth stocks? Do you want to invest in dividend paying stocks? Or do you want to invest in like an index fund? Okay, so growth stocks, an example of a growth stock would be something like Tesla. Like Tesla does not pay dividends. Okay, when you buy shares of Tesla, you're just hoping that Tesla, the cost for each share is going to go up. So currently, I'll show you guys an example. I do have shares with Tesla right now, so I will share my screen with you. Go back here. Let's go back. I appreciate you guys jumping in the stream. Once again, if you haven't smashed the thumbs up, please smash the thumbs up. All right, so I'm going to share my screen with you guys real quickly here. And on the right-hand side, I'm going to scroll down. These are currently the stocks that I have right now. Okay, so you see Tesla here, and I have 70 shares. I'm going to click on good old Tesla. I should have right-clicked on it so it opened a separate tab. That's a rookie move. Okay, so right now, my average cost, right, is $493.39. Overall, okay, I am currently up with Tesla $17,000. So Tesla is definitely responsible for helping me dig out of my negative $60,000 hole. But Tesla is pretty much a growth stock. Tesla does not pay any dividends, okay? And so like I bought it, my average cost right now is $493. Well, if Tesla goes up to, let's say Tesla goes up to, let's say $1,000. For simple math, if my average cost was $500 and the Tesla shares are now $1,000, it would be 70 because I have 70 shares. 70 times 500, that's a $500 difference. I would be up $35,000. Okay, so that's kind of the thing. This is a growth stock. Okay, so growth stocks don't pay you any dividends, and you're investing in the company because you think that over time the price per share is going to continue to grow because the company is going to do well. So you have growth stocks. Then you have what you call dividend paying stocks. Now, dividend paying stocks are pretty interesting. Some of the dividend paying stocks don't necessarily experience the same type of growth. So you're not necessarily going to invest in a dividend paying stock because you want to buy it for $5 and you hope it's going to be $25 one day. Dividend stocks normally don't do that. They may over a long period of time. They do have stocks that pay dividends and they grow as well, but they're not going to grow as aggressively as Tesla or Apple would over a 5-year period. So a dividend paying stock would pay you part of their profits, right? So that's why it's called a dividend. They're paying you a portion of their profits for investing in their company and keeping that investment with them. So what that looks like is some companies pay monthly, some companies pay I was about to say weekly. Some companies pay quarterly, so every 3 months, right? An example of a dividend paying stock, I'll show you guys here on the screen. I have quite a bit of them. I'll show you guys AT&T. Let me do my screen share real quick. And so here's AT&T. Right now, AT&T is $30.09. I currently have, how many shares do I have? 422 shares right here on the screen. My average cost is $28.44. I'm currently up with AT&T, $698. Now, AT&T does pay dividends. I think I have a pending dividend payment coming up here. So as you can see here, it says upcoming activity, May 3rd, 2021. And it says pending transaction. So if I click on it, it's going to give you more information, right? So as a result of owning, at the time, I owed 413 shares. I currently owe 422, but at the time that they decided they were paying dividends, I owned 413 shares, and they're paying 52 cents. Okay, they're paying 52 cents per share. So this line right here, if you multiply 413, 8.8166 times 52 cents, you're going to get $215.18. Okay, so this is a dividend paying stock. Now, if I were to sell the stock, I would still be in profit. I'd still be up $698. So I would make the $698. Okay, but that's not the purpose of me holding the stock. Okay, the purpose of me holding the stock is to oh, I'm not even sharing my screen. Damn, my bad. Okay, yikes. Okay, so here's AT&T, and I'm currently up right now $698 right here, and I do have this pending dividend payment right here for May 3rd. And as you can see, at the time that they decided to pay dividends, I owned 413 shares, and as a result of that, they're paying 52 cents per share. So if I had one share, I'd get a 52-cent dividend payment. But because I have 413, I got a dividend. I'm going to get a dividend payment of $215.18. Okay, when I get that dividend payment, it's going to automatically reinvest. And doing that over time, is the payment is going to continue to grow. So AT&T pays quarterly. So that means the next time I get a payment, instead of having, well, right now I have 422 shares, but instead of having the 413 amount of shares, I'm going to have 422 plus whatever $215 at the time that I get the payment, whatever that allows me to get in shares, right? Because it's going to automatically reinvest and buy me some more shares. So I'm going to get paid based on 422 stocks plus however many stocks I get for the dividend payment of $215. Okay, so that is another way to invest as well, and that way is a little, it's a little more safe and it's a little more hands off if you invest in solid companies. Absolutely solid companies, and we're going to talk about that in just a moment. Now, the next type of investment that you can make in regards to the stock market is you can invest in an index fund. And that's actually kind of funny that I'm teaching you guys about it, because literally it's just made clear to me, like maybe this week, how powerful index funds are. You know, like if you want something that's like totally hands off, investing in an index fund is really, really good. And so index funds, the way that they work is basically somebody puts together a bunch of different companies, right? So they put a bunch of stocks together from different companies. So companies like Google, Apple, Facebook, Microsoft, Tesla. There is several different types of index funds where you can choose, like, for example, you can choose an index fund that is going to be basically the top 500 companies. So it's going to be the top 500 companies in the US, and basically it's like the S&P, which is it's 505 companies, right? And so it's going to invest, the index fund is going to invest in all 505 of those companies. So when you purchase it, you can purchase it like you're buying a share, but you're purchasing small pieces of 505 companies. And so you don't have to worry about doing the research. Like if I purchase Apple by itself, I only own Apple. But if I pay into an index fund, I'm going to own 505 different companies if I'm choosing to invest in an index fund that mirrors the S&P 500. So there are different types of index funds, right? There's index funds where you can invest in companies that are large. They call it large cap companies, companies that are medium size, and companies that are small. And large cap refers to like how much it costs per share and how big the company is, how profitable the company is as well. Medium refers to the same, and then of course small cap refers to the same. So you can do index funds that do that as well. You can even invest in like niche specific index funds. You can invest in like the tech industry index fund. You can invest in like the health industry or medical industry index fund. You can invest in the real estate index fund. You can invest in like oil and gas type index funds. Okay, so index funds is a safer and easier way to invest where you don't necessarily have to do any research. You're just like, I don't know, I'm just gonna pay for the one that mirrors the S&P 500, and I'm just gonna throw $500 every single month or every time I get paid into that index fund, and over 20-30 years that's gonna grow on its own, and you're gonna get payments from that, and they're gonna reinvest it. And that's a very passive way to invest. And so as a matter of fact, as I'm talking about it, it's definitely gonna be something that I'm going to be adding to my arsenal. I'm gonna create a separate brokerage account. I don't think I'm going to invest on Robinhood because I'm probably going to go with Fidelity. I need to create a Fidelity account because they have no fees. Index funds kind of come with fees, and depending on if you use Vanguard or Charles Schwab or Fidelity or whomever else, the other ones are going to be more expensive. There are fees that come with that. So that is something that you definitely want to know. The third thing to consider is when it comes to how to invest in the stock market is you just want to be consistent, okay? You want to consistently invest your money. And so I think one of the best things to do is at least commit to investing once a month. I think that's very easy. For me, because I'm a nerd and I'm OCD, I would invest every single time I get paid. Now, I know that everybody's paychecks and bills are not perfectly aligned, right? Let's say you get paid twice a month. I know that like you might have one of your checks where you got to save a big chunk of your money, right, to pay bills for whatever reason, right? Like it's just not always evenly spread out. So it may not be easy for some people to invest every time they get paid, but if you're investing like $100 every time you get paid, that might be feasible. I don't know, you know your finances, but you definitely want to try to be consistent when it comes to investing in the stock market. And that's a good practice, right? For someone like me, because I'm super duper aggressive, I'm still kind of laboring with how I want to invest, especially if I'm going to invest in an index fund. In my mind, I'm like, okay, I'm driving Uber, I'm working really hard. Should I invest, $1,000 this week? And then next week do something else with that money, and then the next week invest another $1,000. So I would be investing $2,000 a month, which is pretty aggressive. Or should I just invest, $4,000 a month? Let's say I make $1,000 a week driving Uber every single week. Should I just invest $1,000 a month in my index funds? And I'm very much considering that. Okay, and so the next thing that you want to consider is when it comes to buying stocks. If you're starting out and you're very new to investing, you want to buy stocks that are really solid. Okay, and an example of solid stocks would be stocks that are dividend aristocrats or dividend kings. And I'll share my screen with you guys to show you the definition here according to Google. All right, cool. So I have pulled up for you guys a dividend aristocrat. Commonly refers to a company that is a member of the S&P 500 index and has increased its dividends for at least 25 consecutive years. The core definition is consistent with that of the S&P 500 dividend aristocrats. So that is a company that has consistently paid dividends 25 years straight. Most of these companies are probably going to be paying a quarterly dividend, right? So that's 4 dividend payments that you get, okay, for 1 year, but 25 years straight. In addition to that, they have increased their dividend payment. So let's say, you got like 2 cents here, 2 cents here, 2 cents here, 2 cents here. The next year, they increase their dividend payment to 4 cents. So you get 4 cents, 4 cents, 4 cents, 4 cents the next year. So they've done that. They've consistently paid you, but they've also increased their dividend payment for 25 years. Those companies are the type of companies you want to invest in. If you're going to do some dividend type investing, you want to invest in companies that are really solid in that way. Okay, a lot of you guys, are probably more scared with your money than I am. I've kind of built up a little, tolerance for pain in regards to the stock market. So when you're first getting started, it's going to be a little tricky. You're not going to like the way it feels. If you're investing $1,000, let's say you bought $1,000 worth of shares with a company, that's a lot different than if you had $10,000 invested. Okay, if the stock goes down 10 cents and you only have $1,000 worth of shares, that's not gonna kill you as much as if the stock went down 10 cents, but you had $10,000 or even more worth of shares. Okay, so Dividend Aristocrats is a good place to start, and you can always kind of Google and find out who's on the list of Dividend Aristocrats for 2021. Okay, and so that will be a little easier way to decide, and you're going to be familiar with some of these companies because, like, AT&T is one of those companies, right? You're going to be familiar with some of these companies. A rule of thumb is to invest in companies that you think are not going to go bankrupt in your lifetime, right? Like Coca-Cola, people are going to drink sodas from now till I die. McDonald's, Walmart, Facebook, Microsoft, Apple, those are solid companies. It gets a little tricky when you're trying to decide, well, should I invest with Facebook? Because it's like $1 million per share. Like Amazon is a perfect example, right? Amazon's like, I don't know, $2,000, over $2,000 per share. I mean, I wouldn't do it, but Amazon's a solid company, and I don't think Amazon pays dividends. I don't feel like looking it up right now, but maybe I'll search it real quick on my phone because my phone's a lot easier than using the desktop. Let me see, Amazon. Let me search it real quickly. No, of course not. They don't pay a dividend, right? But that's funny. I said Amazon was $2,000. Amazon is $3,300 right now. $3,300 and change, right? That's bonkers. Anyway, so those companies are solid. That's a good place to start. Now, the next ones are Dividend Kings, and I have pulled up on my screen here. I'll share that with you guys right now. Let me click on the screen share real quick. All right, cool. So Dividend Kings are S&P 500 companies who have increased their dividends for 50 plus consecutive years. This, of course, is an amazing record of consistency. This is why only 32 companies that qualify for Dividend Kings, for the Dividend Kings list. Okay, so 50 plus years of consistent dividend payments, and they have also increased their dividend payments. That's huge. Okay, so you could start there, right? If you have no clue about the stock market, you can kind of start there. First, you got to decide what type of account do you want. You want to get like Robinhood, Webull, TD Ameritrade, Fidelity, whatever type of account you want to get. That's the first thing. Second thing is you want to decide what kind of stocks you want to invest in. Growth stocks that don't necessarily pay a dividend. Do you want to invest in dividend paying stocks that may do some growing as well? Or do you want to invest in like index funds, which basically your investment goes towards a gang load of stocks, and it's a lot more safe and diversified, and it takes the homework out of it. You don't have to do any research per se. You just invest in an index fund. And then, of course, I want to encourage you guys to be consistent. Be consistent. Like, try to consistently invest a certain amount of money every single month, or if you can do it every paycheck, that would probably be better. And then if you're brand new, you want to kind of start. I don't know why I just shared my screen. If you're brand new, you want to kind of start investing with Dividend Aristocrats type company or Dividend Kings. And of course, you can do the research on Google, or maybe even here on YouTube. Like, YouTube is such a great platform. It's such a great place to learn information. I mean, Google's a #1 search engine, and YouTube is a #2 search engine, and Google owns YouTube, right? Google is YouTube. YouTube is Google. Well, no, that's not right. Google owns YouTube, right? So that's what you can do as far as like getting started in the stock market. I hope that you guys find that helpful. And if you're watching this back on the replay, feel free to, drop a comment. I see we got 10 people in the stream, only 6 thumbs up. Please smash the thumbs up in this video. If you are new to the channel, consider subscribing. We got my brother Cinemanis in the house. Says Dwayne is back again. Whoa, you're live. Yes, I am. Of course, I'm reading the comments now because I'm done talking. I talked for 30 something minutes. Now I'm in the comment section. Cinemanis says smash the thumbs up. What's going on, Adrian, bro? It's a pleasure to see you, man. I appreciate you, sir. We got Points Blank Travel in the building. I know you got a live stream coming up tonight at 7:30 p.m. Central. If you guys are watching this live stream or if you're watching this back on the replay, go to Points Blank Travel's YouTube channel. He talks about credit cards and points and how to kind of maximize that. So be sure to go to his channel, subscribe, and click the notification bell. Adrian says, I try options now. It's dangerous, but if you do good, you can make a lot of money. Yeah, of course. I mean, and that's the thing about the stock market. There's so many different ways to make a killing. So like, people will see my portfolio and be like, man, he should be doing this because everybody's smarter than I am, right? And so, it's hard to kind of do stuff that you don't know. And it's hard to do stuff that you're not familiar, right? That's just life. That's just what it is. And you don't know what you don't know. Like you have no clue, until you have a clue, until you find out what you don't know. Jazzy MDG, thank you so much for stopping by. I appreciate you. She says hello, Dwayne, in chat. All of these guys are from my other channel. That's so cool. I appreciate y'all. We got Michael M. He says, I have a question. My buying power is fine, but it's saying I used under 115 on my instant deposit. Does that mean I'm negative or am I still fine? That's a good question, Michael. It could mean a couple of things depending on your account. It could mean that some things need to clear up before your balance is accurately reflected, or it could mean that you need to deposit at least $115 into your Robinhood account. Like if you did a deposit right now of $115 from your checking account, right, they're going to give you the Robinhood instant credit right away and it'll clear that balance up. So I'm not exactly sure why it says negative 115 because I don't know exactly what's going on in your account. Adrian says, Dwayne, you want to hold this stock forever or do you think sell some time in the future? First of all, I sold one of my stocks a couple of days ago, and it pisses me off. Like, I hate this. How you operate in the market has a lot to do with your experience, right? A lot of people, and it's so hilarious to me, people will say in YouTube videos and people will say in the comment section, oh, no, you just hold it forever. And technically, right, especially if it's a dividend paying stock, you can hold it forever. But, if you think the company's not going to go bankrupt, right? Nobody necessarily sees a bankruptcy coming, right? You got articles that people write, you have the earnings report, stuff like that. But sometimes you don't necessarily see, oh man, this company's going to file bankruptcy, right? So technically, if you hold on to a dividend paying stock, it might be okay to do that if the company never goes bankrupt. But when it comes to watching your money go down, I sold one of my stocks and I had $13,000 invested with them and I watched it go down. I was negative $1,500 at the time that I sold it. And I was like, there's an earning report coming up in April, at the end of April. I feel like I know for a fact that the earning report is going to be negative news because they didn't meet whatever standards they set for themselves. And as a result of that, I'm like, the price is going to continue to go down. So I sold and I sold it for $5.21 per share. Right now it's like $5.34. And I'm like, F. You know what I'm saying? But my average cost was $5.98. So I watched it go from like $6.18 all the way down to $5.21. Which I should have sold before. So like when it comes to investing in the stock market, you need to have rules as to like, when are you going to cut your losses? If it goes down 3%, you're going to sell no matter what, right? When it comes to the market, if you're going to be selling stocks, it's tricky because you're not always going to be in the green. You're not always going to be up. Right now in this moment, I'm in the green for every single stock that I own right now. Every single stock except for that one. And that one may come back. More than likely it will come back. But I was just too scary and it it just hurt, So basically, I just gave away $1,500. I do have a dividend payment that they're gonna pay me, which is funny because it's for $130. I think that's crazy. I'm still gonna get that payment, but I sold just because I'm like, the article that I read was basically saying that like the value right now for each share should be $4.94. And of course, it was $6.13 or 18 cents. And as a result of that article too, people started selling, right? Like, oh man, got to get out of here. They're basically saying like the company is paying dividends, but they're not able to sustain at the rate that they're paying, at the percentage that they're paying. So they're probably going to drop the dividend yield lower, which means there's going to be a lower payment, which, they could probably do that and kind of fix the situation to some extent. But I'm no guru. Like I'm learning on the fly, right? Michael says any help is welcome, and thank you, Michael. I appreciate you, bro. Thank you for saying that. Like I said, I'm learning on the fly, just like you guys. Alex said, I think a lot of people don't realize investing has almost a completely different mentality to trading. Yeah, I would agree with that. I mean, I personally have, I knew trading for me was what I wanted to do in the beginning. And one of my biggest mistakes was to just dive straight in. I was just live all the way. Like my first deposit into Robinhood was like $50,000. Like back in May 2020, I was just live. I didn't do paper trading. I didn't practice. You know what I'm saying? And that's just absolutely effing stupid. But one of the things that humans are really good at least I am, I'm really good at being delusional. I say to myself, I got it. You know what I mean? Like, yeah, I got it. Like, I understand how this works. You buy low, you sell highs. It's simple, right? It's easy. Come on now. And that coupled with me being really greedy, right? Like I would buy stocks that were like $2, $3. And because I was trying to be a day trader, of course, I'm trying to find hot stocks and I'm paying attention, and it's just so complex, right? So like if a stock was like $2, man, I jump in there and buy like 20,000 shares, right? So it's $2. 2 times 20,000 is $40,000. So I'd invest 40,000. Boom, let's go, right? And of course, just give me a 30-cent swing. I don't even want a whole dollar. Give me a 30-cent swing. Well, if the stock is hot, 30 cents, a 30-cent swing is pretty good if it's in the green, right? You just made $3,000. Sweet. You know what I'm saying? Awesome. Let's go. 3 G's. Now, the 30-cent swing in the red, you're down $3,000. And that's a different type of feeling. So it's insanely tricky. I'm really still kind of trying to figure out what I'm doing and what I want to do in regards to the market. Like I said, I am more confident now. If I were trying to like be a swing trader, I'm more confident now that I would be successful because I would invest with companies that are really solid, right? Like day before yesterday, I think Tesla went down like 40 something dollars. Well, I know for a fact the next day, more than likely, it's going to go back up. It's going to go back up at least $10. You know what I mean? So if I had a lot of money to play with, I'd buy a hell of a lot of Tesla shares and then get my little profit and then sell it. But the theory is always easier than the actual real life and the real life execution and the real life scenario. So trading is a lot more intense and hands-on, and I just still have a bad taste in my mouth about it. So and I'm still down from it, right? Like I'm still in the green, like very much in the green. When I was down almost $60,000, I'm like, yo, I could have paid off my student loans, and I was like, F those student loans. You know what I mean? I was like, I'll just pay them little by little over time. This 3.25% interest or whatever it is just going to continue to kill me. I was going to use another word. But this 3% interest is just going to continue to kill me, but it's fine. It's fine. And here I am down negative 60 G's. Trust me, it really hurt. And, I had to decide, what, F this day trading thing. I'm going to sell all my stuff. And when Apple and Tesla did the split, I bought a bunch of Apple and Tesla shares right there. Okay. And that kind of helped, I'm up 17 G's with Tesla. And the crazy thing is I could have been up more if I bought more Tesla shares. Like right now, I have invested with Apple like $70,000, right? So Apple's the biggest holding in my portfolio right now. Let me double check here. So with Apple, I have $74,000. It's worth $74,000 right now. So yeah, I'm up basically $70,000 invested with Apple. I'll show you guys that here on the screen just so I can verify. So you see it says market value $74,000. Uh-oh. There we go, $74,000. And then the total return is plus 48.94. So it's almost like a 4,000. So I have invested with Apple $69,000, right? That's Apple, $69,000, right? And then with Tesla, I have invested like 30-something $1,000. So right now with Tesla, you guys can see there my market value is $51,000. So 51,000 minus 17 is how much I invested when I bought with Tesla, right? So I'm currently up $17,000. Now, basically between Apple and Tesla, that's 100 G's right there, right? So of course, as I'm thinking about it, if I took that same $100,000, sold all my shares with Apple, sold all my shares with Tesla, and throw it into an index fund, you know, like an index fund that mirrors the S&P 500, that might be more beneficial for me. It might be. I don't know. I'm still learning. I'm still trying to figure it all out. So the stock market is definitely not the easiest thing. That's for sure. And like I said, I'm by no means a guru. I don't pretend to be. I don't have time for that. Cinemadness says another thing I like to look at with those Dividend Kings and Aristocrat is the payout ratio, because the lower it means that means they can more easily sustain and grow the company. Perfect. And thank you so much for bringing that up. Once again, your boy is still learning. You know what I'm saying? Like, I'm just going for like, hey, they've consistently paid dividends for 1,000,000 years. Cool. Let's go. You know, there are so many factors when it comes to the stock market. You know, people like to act like, you know, some of these companies is just dead on. No matter what, they're always going to be around. When in reality, you know, anything can happen, right? Of course, there's the chances of some companies going out of business is less likely compared to others, but at the same time, nobody knows the future, right? God Emperor of Man says, if I had 50,000, I'd probably make $100 in dividends already. Okay, cool. Yeah, I would hope so. I would hope so for sure. Michael says, I think I know what it's saying. It's saying deposit is on the way. It's giving my amount I deposit in, and it's saying I used 115 of it, and guessing that it's saying the amount within the 115. I wish I had a way to show you. Okay, yeah, I mean, I hear you. I mean, like I said, Robinhood is kind of tricky, but I know when my account says negative, like it'll say like -$5 because I owe money. I owe $5 for Robinhood Gold. I normally don't let money sit in my account, and right now I just have $7,000 sitting there doing nothing, which is totally unlike me. I may transfer all that money out and open a Fidelity account and start investing in an index fund, or maybe a couple of index funds with Fidelity. But of course, I'll keep you guys posted to that. All right, I'm going to end this stream here. If you guys have any questions, please feel free to ask. Throw it into the live chat right now. I'll try my best to answer it. I see we have 13 people, only 9 thumbs up. Please smash the thumbs up if you haven't already done so. I'd really appreciate that support. I see we have 14 people now. Once again, if you have any questions, throw them into the live stream. I would really, really appreciate it. And if you haven't subscribed, be sure to subscribe to the channel. You know what I'm saying? I'd always like to get more subscribers. We want to grow this channel here. Sweet, we got 16 people in the building. I'm actually kind of wrapping up. This is a live stream, you guys. You guys can definitely go back and watch the replay. there's some solid information. I feel pretty confident about the information that I talked about in the first 30 minutes of this video in regards to how to start investing in the stock market, right? And I'll just kind of give you a quick synopsis real quick about those 4 points that I mentioned. The first thing is you got to decide what type of investment account you'd like to have. Do you want to have an app such as Robinhood, Webull? Do you want to do TD Ameritrade? Do you want to do Charles Schwab, Fidelity, Vanguard? What type of brokerage account would you like to have to start investing in the stock market? That's kind of the first thing you need to think about, right? The second thing that you need to think about is you need to decide what type of stocks you'd like to invest in. Do you want to invest in growth type stocks? And an example of a growth type stock would be Tesla. Tesla is a stock that you would buy and hope that the price goes higher, right? I shouldn't say hope, but like you'd buy it knowing or thinking that the price is going to go higher, because Tesla does not pay any dividends at all. They don't pay you, portions of their profits for owning small shares in their company. The next type of stock is a dividend paying stock, where they pay you for owning shares. So if you own one share and they're paying you 20 cents for each share you own, if you had 10 shares, you would get $2, right? That's how that works. The next type of account, or the stock, but it's not a stock, it's stocks. It's index fund. An index fund is a collection of stocks that somebody puts together, and it may be anywhere from a index fund pertaining to only tech stocks, or an index fund pertaining to only real estate stocks, or an index fund pertaining to dividend paying stocks, or high dividend paying stocks, right? Or low volatility dividend paying stocks. So there's different types of index funds that you can invest in. And that one's a lot easier because there's no real research that you have to do, because there are so many different companies in that index fund, right? You have index funds that have 2,000 different companies, 3,000 different companies in that particular index fund. And those are a lot easier to do. You just basically throw your money into that account. Boom. You just throw it towards that index fund. You don't have to worry about if Apple goes down today, oh man, I'm going to be scared because I might want to sell it. Index funds, you don't have to worry about that. You're more concerned with just investing over a longer time period. Okay. And you do get payments with an index fund. Sometimes you get paid semi-annually, which is just twice a year, or you might just get paid once a year, and you can take that money and reinvest it back into that index fund and continue to grow it. Another thing you want to think about is you want to think about being consistent with your investment. You want to commit to investing at least once a month. Okay. I would also suggest maybe try to invest every single time you get paid. So if you get paid twice a month, invest maybe $200 twice a month, right? Or if you get paid weekly, then invest X amount of dollars every single week. You just want to be consistent, and you want to consistently commit to that for the next 20, 30 years. Now I know life is going to change, and your bills are going to change, and your priorities are going to change, but you just want to consistently be contributing something to your investment. And then of course I talked about, if you wanted to choose your own stocks to invest, I would suggest starting with companies that are dividend aristocrats and companies that are dividend kings. Okay. The difference between the two is companies that are dividend aristocrats, I think, let me make sure before I tell you the wrong stuff. Companies that are dividend aristocrats, I think, they've paid consecutive dividend payments for 25 years, and they've increased their dividend payments every single year as well. So if they pay 4 times a year, that means you get 4 payments that year, and then next year the dividend payment is higher than it was the year before. They've done that for 25 consecutive years. Dividend kings are companies that have done the exact same thing, but they've done it for 50 or more, 50 plus years, where they've paid consistent dividends, and they've increased their dividend payment every single year. So those types of companies would be where you'd want to start if you want to do individual investing in different companies. You can just Google like dividend aristocrats. What are the list of companies that are dividend aristocrats in 2021 and dividend kings in 2021? And so that's what I talked about in this live stream. Once again, I'm by no means a guru or anything like that, right? I'm just sharing my own experience with you guys, and I appreciate every single one of you that's watching this video. If you're just now joining, be sure to watch the replay back, okay? And smash the thumbs up on the way outside the door. I appreciate you guys so much. Let's see. Adrian says Tesla earnings is this Tuesday. I hope they beat it. Yeah, me too. You and me both. That would definitely. I think that type of news would definitely make the price of the stock go up. Michael says I subscribe. Thank you, Michael. I appreciate you very much. We got Bubby in the building. Hey, thank you so much for watching and hitting that thumbs up in the video. I appreciate you very much. Cinemadness says awesome first live stream. Can't wait for the next one on credit or investing. Hey man, I really appreciate the kind words, bro. Thank you so much for supporting. I know there's a lot of people from my other credit channel here watching this live stream. I appreciate y'all so much. Adrian says, please don't invest your money on meme stocks like GameStop. Not gonna do it. I missed that boat. I missed GameStop and AMC. I wasn't worried about GameStop, but AMC was definitely on my radar. And literally the week that it popped, I was looking at AMC and it's like $2 and something. And I was like, I should just buy 1,000 shares. Like, you know, $2, you know, 1,000 shares. I should just buy 1,000 shares real quick, right? And I'm like, AMC is not going to go bankrupt, right? And then literally it exploded and I would have made a lot of money. But, you know, the stock market is very much that way. So I can't do anything about it now. All right, you guys. Thank you so much for watching this first live stream. Once again, my name is Dwayne with My Investment Journey, and I approve this video. I'll see you in the next video. Until next time, take care and be blessed. Peace. Later, guys. Have an incredible week.